Hey guys, Matt here with another stock video, this one on Tesla and everything surrounding the S&P 500 inclusion and what I'm expecting to happen to Tesla shares leading up to the S&P inclusion on the 21st and the immediate after effects of Tesla being added into all of these ETFs. So as usual, I have my Wall Street Bets post that starts me off on my path, and then I start doing all my own research and due diligence. And a lot of the credit for this video is going to go to Zero to Hero Investing, which was posted 2 days ago in the Wall Street Bets subreddit. Link will be in the description below. So I've got some stuff highlighted here that I'm going to go through and then start referencing all of my backup. If you're new here, welcome. If you guys appreciate this information, please don't forget to like. If you guys are not subscribed, please subscribe. It helps me out a lot, and it helps me get this information out to other people that are looking to invest. So with that, we're going to jump right into the video. Should you buy Tesla stock before it enters the S&P 500, or should you wait it out? So Tesla has seen a huge move to the upside after the S&P inclusion news. This is not new news to anybody. So we actually had the announcement on November 16th from the S&P come out, which announced that Tesla would be added to the S&P 500. And since then, just in the first day, Tesla ended up spiking 10%, and then since then has actually spiked 50%. Before the announcement, the market cap of Tesla was actually sitting under 500 billion. At this moment, they have just crossed the 600 billion market cap mark, which is crazy. That actually makes them more valuable than Toyota, GM, Ford, Nissan, and Honda combined. So with that, I want to go into some of the positive news around Tesla happening right now, separate from the S&P inclusion, what it could mean for the price, and then of course what I expect to see happen leading up to this S&P inclusion and immediately thereafter. So as of right now, Tesla is actually looking to make investments in Indonesia to source nickel. And this is because nickel is the main component of these lithium-ion batteries. And just in this past year alone, we've seen nickel prices go up by 20%. So as we know, Tesla is very, very big on vertical integration and doing everything that they possibly can to do all of the processes from start to finish for the creation of these vehicles in-house. So with that, there have been talks with the Indonesian government. So President Joko Widodo has been vocal about the nation's plan to become the biggest producer of lithium-ion batteries with its vast nickel reserves waiting to be tapped. The ministry confirmed that Widodo and other government officials talked to Elon Musk about investment opportunities on Friday. This was, I believe, 2 Fridays ago. Yeah, this was published on December 12th. So that looks like a positive for Tesla long term, since they'll probably be able to cut the prices down of the nickel that they are purchasing for their battery production, as long as they're able to get to a agreement on a massive contract, I assume, for the nickel reserves in Indonesia and the ability to mine the nickel. Some other good news for Tesla is, as we know, they've been killing it. Their sales are through the roof, and they've been, and to pinpoint some statistics on this, from China, they reported an increase of more than 100% year over year in electric vehicles and hybrid car sales, with sales of electric cars from Tesla surpassing 21,000 in the last month, while overall car sales also increased in China more than 11% since last year to over 2.3 million. So another positive look for Tesla, that as EVs are constantly getting more and more popular, of course their market share is increasing, they're selling more vehicles, and they're on the uptrend in this regard. And as we know, more car sales equals more profit. More profit, I mean, stock price tends to go up as your valuation starts to go up. Now, on the flip side, Tesla filed an 8K form. And just in case you guys don't know what an 8K form is, an 8K form is what you file as a company with the SEC if you need to make a large announcement that needs to be presented to the public. So here I actually have that 8K form from the SEC that Tesla filed on December 8th. On December 8th, in summation, they basically said that It entered into an equity distribution agreement to sell shares of common stock of Tesla, having an aggregate sale proceeds of up to $5 billion from time to time through an at-the-market offering program. What does that mean? It basically means that they can dilute the stock at any time for up to $5 billion worth of stock. So historically, when you look at any company introducing more shares and thereby diluting what is already on the market, you tend to see the price drop. We just saw this actually after the earnings report on GameStop. However, it's very, very different in Tesla's case. And the reason I say that is 5 billion sounds like a very large number, but we have to understand that this is relative to Tesla's market cap. The market cap that just surpassed $600 billion. So we're talking about less than 1% of the company will be diluted. Tesla on average moves usually more than 1% in the positive or the negative, and usually far more because it tends to be a volatile stock, since there is so much volume based on news on the daily that comes out around Tesla. So in reality, this SEC filing, this 8K, which tells me that Tesla can introduce more common stock to raise money, typically, like I said, would be a negative look for any other company. But in reality, this is more of a positive look to me. Now, let me explain that. The reason I say that is because what Tesla is going to be spending this money on. They've got about $15 billion in cash right now. And after this $5 billion in stock issuance comes out, they're going to have about $20 billion in stock. $20 billion in cash. And this $20 billion in cash is expected to be used in capital expenditures, i.e. more factories and items such as factories, and R&D, so research and development. And as we know, Elon is all about innovation. And if he's spending that much money on consistently innovating into the future, we know how that's going to turn out. Tesla is constantly improving their products and constantly doing whatever they can to stay at the forefront of their industry. So this 1% dilution of shares that can happen in fragments over the next year, to me, if anything, this just tells me that Tesla is reinvesting in themselves, and they're going to consistently keep innovating to provide a better and better and better product through their over-the-air updates in their vehicles and for all the new vehicles that are coming out. So in reality, like I said, I'm looking at this as a bullish, positive look for Tesla. So now getting back to the S&P inclusion news, what do I think is going to happen? Well, as we know, pointing out before, the announcement was made on November 16th. We know that the price on November 16th was just over $400, and to date is at $633. I think it hit a top of around $645 earlier yesterday. That's over a 50% return in a very, very short span. What does that mean, and what can we expect? Well, if we take a look at the RSI, which is the Relative Strength Index, and what this is for anybody who doesn't know, the Relative Strength Index, developed by J. Wells Wilder, is a momentum oscillator that measures the speed and change of price movements. So the RSI goes between 0 and 100, and usually what's considered overbought territory is anything over 70. Tesla's been hitting over 70 ever since the S&P inclusion news. So it's in overbought territory. Well, what happens when a stock is in overbought territory? Well, you have a lot of volume. And when there's a lot of people trying to get in and buy and sell Tesla, it makes it more volatile. More volatility usually means high upswings, low downswings, but in this case, it's been all high upswings. So it looks like Tesla could potentially be a little oversaturated right now at the price it's currently at. Taking a look at the volume since the announcement, you've got the volume on the 16th of November before the news broke was 27 million roughly. After the news broke, volume shot up over twofold to 61 million, and then the following trading day at 78 million. It stayed above 60 million. It then cooled off after those 3 days to roughly 32 million and started trending upward again to the 50 million range. Now, it starts oscillating between 40 million and 70 million, which these ebbs and flows still have it in very, very high trading territory, which, as I was saying, can indicate that the price is probably a little oversaturated at this moment. Something else that is indicative to me of a potential, I don't want to say correction, because I truly believe in Tesla stock and everything that they are doing. I buy Tesla stock and sell it pretty regularly. I try to momentum trade it. Granted, I probably would have done a lot better had I just bought it and forgot about it when I started momentum trading it. But now that I look into stocks more, I tend to have what I believe is a little bit more of a better feel around this than I did in the past. Anyway, looking into some other news that came out on December 12th, Tesla announced that their Model S and X production was going to be shutting down over this holiday period for an extended period of time. And a lot of people believe that the rumor is that it's undergoing a design refresh. And this is because the sales of Tesla Model S's and X's have just been lagging as of late. And so it looks like it needs a little bit of a refresh in order to boost sales back up. With that, you're going to have less revenue coming in from Model S's and X's. Granted, it isn't very much of the revenue that they're making. I believe it was roughly around 15% of their total revenue. But still, it should be expected to make probably a very slight difference. If anything, the news of this and their Q4 earnings for 2020 will probably be impacted slightly by this. Now, to dive a little bit deeper, I've got a paper here from the National Bureau of Economic Research. It was published back in July 2020, and it is in regard to what happens to a firm's value when it joins the S&P 500 through an inclusion. So looking at this, I read through this entire paper. So if you didn't like the video yet, please, just for the sake of me spending way too much time on reading all of this, I'd really appreciate a thumbs up. Looking at some of the high-level deductions of this paper on what happens, I want to read this section from the conclusion because even though I have highlights throughout the article, a lot of this is summarized very well in the conclusion. In this paper, we first show that the impact on stock returns from S&P 500 index inclusion has changed substantially over time. During the sample period for this paper, which is through 2008, it looks like there is no longer a significant positive abnormal return, and the long-run impact of index addition on the stock is negative. Let's hold on a second though. What does that mean? Because at face value, it sounds like once a firm gets added to the S&P 500, it goes down. We know that's usually not the case because you join the S&P 500 index, ETFs have to buy you, and then over time, the index ends up trending upwards over time. We have to remember that this is measuring abnormal returns, anything outside of the norm. So even though the S&P 500 tends to do well over time, you just put money in there, forget about it, and you end up getting a nice 7% return over 10 years. This is measuring abnormal returns. An item to note though is that when a firm joins the index, it acquires investors who are indifferent to the price of the firm's stock. In other words, when people put money in a mutual fund, they aren't actively investing in all the individual stocks in the mutual fund. They aren't selling this one and buying that one and moving money from this one to that one. They're just setting their money in this mutual fund and forgetting about it. And usually what that does is because there are so many ETFs that have to buy Tesla, a large pool of the volume is going to decrease because there's going to be less common stock available on the market. Well, what happens when you have less volume? You have less volatility. And so what happens is the price of the stock becomes less informative. What they mean by informative in this paper is that something amazing may happen. Tesla may have some breakthrough new innovation, and instead of producing what we've seen in the past with 10, 20, 30, 40, 50% returns in a short period of time, it may only end up being a 5 to 10% return over the same period. And this is because the price is less movable by this kind of news, not only in the positive, but also in the negative, and it starts to kind of stabilize the stock because you have less active investors, less volume that can affect the stock. So what this says to me, in my opinion, and how I am reading all of this, is that Tesla from here on out may not be the wild ride that it has been for the last several years. It may be that Tesla can still see some great returns compared to the rest of the firms in the S&P 500 collectively. However, we may not see what we saw in this last month because of the S&P inclusion, and what we've seen over the past years as thousands of % return on your money if you had just put it in Tesla and forgot about it, where I believe it's a 760% return year to date in 2020 alone. We're probably not going to see that anymore. Now that they are joining the S&P 500, like we were saying, less volume, less active investors, more passive investors, this is probably going to turn into a less volatile stock. But in my opinion, Tesla being the innovator that it is and having Elon Musk at the helm, can really do anything. So even though this is what historically this paper shows, I still think that Tesla is going to be a great bet for the future. I really believe in the company. I really believe in Elon Musk's vision. I love this company through and through. I actively invest in Tesla, but I truly think that one thing I can take from this paper is that volatility is probably going to decrease due to volume decreasing. And this isn't going to be a trade on the news type of stock as much as it was in the past. I'm not saying you're not going to see some really good returns off of news, press releases that come out, and PR events that Tesla has making new announcements. We see that with everyday other stocks that are out there on the S&P 500. I just don't think it's going to be to the extreme that we have seen over the last several years. Now, if you want to look up any announcements on Tesla, like when they announce inclusion on the S&P 500 or anything like that, you can always find that on spgglobal.com, which is the S&P website. And so with that, guys, in conclusion, what I really think is going to happen to Tesla stock leading into this S&P inclusion is I think it's peaking around the 650 range. Right now it's around 633. And I really see it kind of tailing off until S&P inclusion on the 21st. Since ETFs are going to be buying this stock in one single step per this article on CNBC, which indicates that Tesla will be added to the S&P 500 in a single step despite its more than 500 billion market cap, now 600. S&P Dow Jones indices said on Monday, foregoing a possible phased approach that was considered to ease the impact of adding such a large company to the US stock benchmark. Tesla's addition to the S&P 500 will be based on the closing prices of Friday, December 18th. So in 2 days, whatever the closing price is of Tesla, that is what the addition of Tesla to the S&P 500 will be based on, which is probably going to be somewhere north of 600. However, following that, with their production shutdown of the Tesla Model S's and X's, with less volatile, less active investors in Tesla following this, I think we're going to see some cooling off on the stock. I actually sold mine at 645 yesterday, all the shares that I had. So I was able to actually secure some profits, which we're probably going to see several other investors do through December to secure profits through 2020. But I'm going to be paying attention every day to Tesla, as I believe it will cool off during this holiday period. And then as we kick off the new year of 2021, I believe that Tesla will start to gradually come up again, of course, assuming no crazy new news comes out again. And I think it'll be a good opportunity to buy and get in again. So that's what I'm doing, guys. Let me know what you think about this. Let me know if you're making any moves on Tesla, if you're just holding through the entire S&P 500 inclusion, or if you're selling, or if you're thinking about getting in now. And let me know why in the comments. I'd love to have a conversation with you guys. That's it for today, guys. I hope you guys appreciate the video. If you like it, please like the video. If you're not a subscriber, please consider subscribing. I'd really appreciate it. And until next time, guys, see ya.